I'm Alan Kenny, Editorial Director with REIT.com, and I'm in Chicago for REITWeek 2013, NAREIT's Investor Forum. Joining me is Seth Weintrob, Managing Director with Morgan Stanley. Seth, when we last talked back at REIT World in 2012, you talked about how you were expecting to see an uptick in deal making in 2013. Has it lived up to your expectations so far?
I do think in large part it has. If you think about some of the key themes when we think about sort of REIT M&A, I think one was a lot of the private platforms that were taken private in the sort of 2005 to 2007 wave that are sort of reevaluating things. And the biggest example of that, which I think was probably after we last spoke, was the sort of Archstone sale to Equity Residential in Avalon Bay. I think the second theme, frankly, was certain sectors that traded at big premiums to the underlying value of their assets, and where there was also some sort of multiple separation or arbitrage. We're seeing that play out a lot in the triple net space. You've seen a number of transactions from the likes of Cole, ARC, Realty Income, Spirit. And then I think we're going to continue to see more play out in both of those themes. And I think the other was actually the non-listed REIT space. And there is a fair amount of overlap between that and the net lease sector. So I think there have been some of those trends. But I also think with the IPO market, frankly, getting a little bit better, we've seen probably a little bit more on the sort of listing and IPO activity from some of those companies rather than M&A. And I think the last thing are more sort of specific situations which have probably made sense for years and years, yet kind of needed a trigger event to happen. So we saw that with MPG and Brookfield. That was probably a transaction that had been speculated on for 10 plus years. But I think there were some specific circumstances at MPG that really drove that, including sort of tax protection wearing off, some of the debt maturities, CapEx needs, and then also most recently probably Colonial MAA, which again is a transaction that has sort of made a lot of sense for a while. But I think there are some particular circumstances today where it made sense from a management standpoint, succession standpoint, et cetera. So, I think they've, for the most part, have kind of played out as anticipated.
And I want to get your take on the Federal Reserve's policy of quantitative easing. What's that doing for cost of capital for REITs?
I mean, there's no question that the Fed's policies have benefited all rate-sensitive sectors. I think real estate is probably at the foremost in terms of the benefit. That said, I think it's actually impacted real estate generally, not just REITs per se. And so you're seeing, frankly, the private capital in the space benefiting from low interest rates, lowering their cost of capital, certainly on the public side, with investors sort of moving into more yield-sensitive sectors. We've seen that back up a little bit over the last few weeks, as we've seen the first sort of intimations of the Fed potentially backing off. I think probably there's been a little bit of an overcorrection, because I do think that as long as, if we see rates go up sort of slowly but steadily over time, I actually think the sector can handle that, because to some extent, I think that's going to be more of a sign of better operating fundamentals to come. I think large moves at one point in time or another are never a good thing, and I think people are obviously very worried about that and thinking about how the Fed messages its policy going forward.
And lastly, let's look ahead next 6 months, say. Are you going to be expecting a lot of IPOs, any certain sectors there?
Yeah, look, I think the IPO market over the last sort of 6 months to 9 months has actually been a lot better than it had been over the past couple of years. And I think it's sort of a self-fulfilling prophecy to some extent, because I think one of the things that's really fed it is deals working for investors. And so probably starting back from Spirit in the middle of last year through Cyrus One and Aviv and others, I think a lot of IPOs have worked both for the companies and for new investors coming in, outperforming as they've come into deals, and so are a little bit more willing to play new deals going forward. So I do expect to see an increase in activity, or a continued pickup in activity. I'm not sure it's going to be sector specific per se. There's obviously a lot of activity in the sort of single family rental space, but beyond that, I'm not sure it's going to be specific to a certain sector, because I think to some extent, the broad market, again, but for this most recent hiccup, has been trading pretty well, and probably to levels where, you can actually see IPO activity happen where it works, again, for both existing owners and platforms and management teams, as well as new investors coming in.
All right, well, thank you very much for your time, Seth.
Sure, thanks.
And for more on this and other REIT news and analysis from REIT World 2013, be sure to check out REIT.com.